One of the biggest headaches that any business has is employee benefits. The Affordable Care Act, 10% annual premium increases, and the raising of deductibles, co-pays, and coinsurance are unbelievable. To say it mildly, American health insurance is in a chaotic state. To make the best decisions regarding your group health insurance, it helps to understand the structure of health insurance and a particular principle of insurance. Let's begin with the structure of health insurance. When you acquire health insurance, do you believe that you are getting insurance from one insurance company? Actually, there is a chance that 3 insurance carriers are involved. Health insurance is generally tiered into 3 levels. Each level refers to an amount of the claim responsibility. Therefore, the primary level begins with the first dollar of a claim and extends to a particular amount. For many years, the amount was $10,000. But now, many times, this level will go to the first $25,000 in claims. The second, or intermediate level, would be the next $100,000 to $250,000, whichever is in the contract, in claim responsibility. The final level would be any claim amount over the intermediate level. The final level is referred to as reinsurance. Since there are 3 levels and the levels are contractually defined, it is totally conceivable that your group plan has 3 insurance companies involved. And since the claim must go through the primary and intermediate level to get to the final level, which means the final level will have over a $100,000 deductible, and the number of claims reaching this point is much less, the final level is still very reasonably priced. Likewise, the claim must exceed the primary level to get to the intermediate level. As a result, the intermediate level will have a $10,000 to $25,000 deductible. And the intermediate level is actually fairly priced. However, the primary level, the first $10,000 to $25,000, is where all of the claims originate, and the vast majority of the claims do not exceed this level. It is a level of frequent and lower cost claims. Copay benefits add to an already extremely costly administrative expense. This level is very expensive and arguable that it is unaffordable for many consumers. If you are a small to mid-sized group, you should focus on a strategy for the primary level. The insurance principle that is critical is insurance is a tremendous tool for the transfer of risk of low frequency and high catastrophic losses. The principle is why the final or reinsurance level is very reasonably priced. In the final level, there is low frequency and the losses can be huge. This level is a perfect fit for insurance. But the primary level is high frequency with a low claim cost. Think about your doctor office visits and prescription co-pays. Insurance is not a good transfer tool for these areas. The violation of this insurance principle is one of the main reasons why the copay style plans have increased in premium so much over the past 20 years. In fact, I predicted today's situation when copays became popular 30 years ago. Our situation was not avoidable. It was inevitable. If you are trying to salvage your existing copay style employee benefit plan, our recommendation is to investigate the innovative products that adhere to proven insurance principles that give you some control and can lower your costs. Look, your options are you can continue raising deductibles, co-pays, and co-insurance to offset the premium increases. And we'll be happy to negotiate the best co-pay deals with the quality carriers. But how well has that been working for everyone? Another option is to replace the plan with something else. Or the other option is to discontinue your employee benefits and be faced with possible governmental penalties. The choice is yours. I'll give you an example of why we like the innovative approach. We were contacted by a church regarding their employee benefits. The church was a member of an insurance trust. The trust was going out of business. The church contacted us for our assistance. They wanted a plan that was similar to their old copay style plan. We contacted the major carriers and got the most competitive copay plans available. We also got quotes for health savings account plans. Both style plans were presented. A retired insurance agent was one of the elders. Largely because of his support, and the HSA plan had a $60,000 lower premium, the church chose the health savings account. 2 years later, the church's renewal had a 4.5% reduction in premium. Superior coverage and a lower premium is a combination that is hard to beat. Naturally, we cannot guarantee the same results for everyone, but you should consider any viable option such as health savings accounts, health reimbursement accounts, and partial self-funding plans. And if you need information about the Affordable Care Act, which has also been called Obamacare, along with many other names, we plan on including a video in the future on this topic. But before I close, I'll mention if you need a plan to avoid the $2,000 or $3,000 per employee Obamacare penalty, there are minimum essential coverage and minimum value plans available. These plans should not be considered major medical plans. They are not free, but they are far more affordable than the penalties. And upon your request, we'll be happy to provide you with information regarding these type of plans. If you are interested in our services, please contact us at your convenience. But please do not wait until the last minute. Good luck and take care.